Things change. We get older, housing prices go up, we owe taxes. We try to beat age with serums and potions, gizmos and gadgets. We buy a home, build a deck, add a hot tub. We get older still, thankful for the investment we made into our home. Go to sell, only to find that we owe taxes on our longest held investment. We can't help getting older, we can't control home prices, but we can avoid paying unnecessary taxes by using the TooMuchEquity Method to tell us when we should sell and buy our next primary residence. What is the TooMuchEquity Method, you ask? The TooMuchEquity Method is a long-term strategy for your primary residence to maximize your equity and minimize your taxes. Take these examples. Jesse and Mike bought similar homes at similar prices at similar times. Jesse bought his first home in 2003 for $180,000. He sold that home in 2017 for $480,000. It took 14 years, rehab and renovation to get this appreciation. After renovation expenses and the cost of sale, Jesse had almost exactly a gain of $250,000. This is important because the federal government allows single homeowners to gain up to $250,000 in equity tax-free, or $500,000 for the married folks. So Jesse didn't pay any additional taxes when he sold. Jesse then rolled that money into another property that he bought for $670,000, and in less than 3 years had accrued another $250,000 in equity, again tax-free. That means Jesse owns a $1 million home and has accrued $500,000 in equity tax-free. Mike stayed in his original home until it was worth $1 million. He also accrued $250,000 of tax-free equity, but because he didn't make a move, he owes capital gain taxes on all equity earned over the tax-exempt amount. By staying in the same primary residence and not paying attention to his equity and federal tax limits, Mike kept less of his equity and paid more in taxes when he sold his home. Knowing how much equity you have and knowing the federal income tax limits on that equity can result in increasing your long-term equity by 50% while reducing your tax basis by 25%. Wondering if you should sell? Answer 9 questions on our website and we'll help you determine when you should be thinking of selling and buying and building the next round of tax-free equity.